Alright, what's up, guys? Talk to me, party people. Hey, what's up, Andrew? What's up, Maddie? What's up, Ab? Alrighty, guys. Mr. Mirza, Tony, Tim, JB, and Rich in the house. Alright, guys, well, happy CPI day. Pretty good action here. Mighty fine action from the Bulls. So, bigger picture. And mind you, we're not all that far off. But I do think the S&Ps here are shaping up for a test of that 4,500. And I think the Qs here, everything looks pretty poised for a breakout above the highs. Big threes bullish on the weekly, the 2-hour, 1-hour, and the 30-minute for the Qs. Check the signals here on the spiders. Everything leans pretty bullish. We'll check the small caps. We can't forget the little guys. Wow, look at the small caps. Let me check that weekly chart. Remember, the better participation we can get from things outside of the tech names, the better the odds of seeing that monthly squeeze in the S&Ps actually fire to the upside. So small caps are looking pretty good here on the weekly chart. And then we shall check the Dow. Yeah, Dow looking pretty good. You got a couple nested squeezes here. So the Dow checks out, and then we'll check the equal weighted index. And this is actually the chart to watch. The theme of the week has been waiting. You had the rebalance in the tech stocks, your Apples, your Microsofts. Their weighting got a little bit too big. When you look at the RSP here, there's no weighting. Well, there's a weighting, but it's everything in the S&Ps with an equal weighting. So it's kind of a better snapshot of the market itself. The SPX, the QQQ, they have the influence of a few of those big tech giants. So point being, if this begins to fire a weekly squeeze, that just tells you straight up you're in a strong market. And granted, technology and the semiconductors probably leading the way. But collectively, that's a good look here for the market. So your weekly charts look good, your daily charts look good. But days like today are always a little bit tricky where, for starters, with something like a CPI report, you could have just as easily seen the market gap down 1%. So always kind of tricky to put on a bunch of exposure before the announcement. But what makes today kind of tough to... And don't get me wrong, the temptation is there. But what can make a day like today kind of tough to just start chasing longs out the gate. If we put the Keltner channels here to 4 average true range moves above the 21 EMA, your hourly chart this morning gaps up into +4 ATR. Usually if you're pushing through +2 to +2.5, even that's a pretty good move. So a push into plus or -4, that kind of tends to be an extreme. Doesn't necessarily imply the market falls apart, but in terms of probabilities, it's really rare you're going to open up at +4, and then from there just continue to pump higher all day long. So from here, a couple of ways that things could play out. And believe me, there's a good chance where, maybe this thing just gaps up tomorrow. And we're pushing right towards that 4,500. But what I would look for is for price to meet back up with the 21 EMA. And that can happen in the form of a flush. We pull back to the 21. Then you try to take it longer from there. Or that could happen in the form of a big chop fest, where if your 15-minute, 30-minute hourly charts just sit sideways for a bit, kind of like you're seeing here on the 30-minute chart, that can give everything enough time for the moving average to then come up there and meet back up with the price. But that's what I'm looking for across a lot of these hourly charts, is for price to meet back up to the hourly 21, either in the form of a big chop fest or in the form of a flush. As far as the options pricing goes, and again, that's another thing that makes jumping into longs today kind of tough. For us as options traders, we always have that, you always got that extra dynamic where we're trading the charts in front of us, but we're doing that through these leverage contracts. So you can imagine this morning, all of your calls at the open, they're all getting pumped up. Now, if you buy those calls, especially if they're short or dated, you're up here at this extension. Those calls are already kind of getting inflated. If you don't catch immediate continuation, those calls lose 10, 15, 20% just on the chop. So my preference here, not saying it's going to unfold like this, but my preference would be something kind of like back here. I mean, that'd be perfect as far as a good entry. As far as the market actually proving itself, pull back to the 21, find support, big 3 reloads of the fresh buy signal, then we're playing for the push higher. That little bit of a flush makes the options pricing a lot more attractive. All those calls are pumped up here. You get yourself a pretty good discount on the back test. Again, we might gap up and it's just off to the races, but that's kind of what I'm looking for. I'll show you guys the hourly chart here for the Qs. You're kind of up here at +4. So as far as a few names that I would like to buy, the first idea here, guys, is just buying the S&Ps. If we can get something like that dip to the hourly 21, then I think some put credit spreads, maybe some cheap calls for a push into that 4,500. At least for now, is a trade that I think makes a lot of sense. As far as a couple of the big boys, though, and allow me to put these Keltner channels back to a reasonable level. And I'm going to put them back to their proper color. Alright. Back down you go. Alright, so first up is AMZN. We've got our daily squeeze. And, momentum is beneath the 0 line. So, but one observation here. So when we took our trade a couple of days ago, price was going higher. At the same time, momentum on the histogram was going lower. So that's a little bit of a divergence. Now, momentum is not bullish. We're still under the 0 line. But you are starting to get a little bit of a positive kick. So I don't think it's going to be... It's never going to be as clean as it was back here. Momentum is bullish. You have a daily buy signal. That's like A+. A++. But if anything, if you can get that positive kick, try to get that positive turn in momentum. It does give you a little bit more to work with as far as trying to see that daily squeeze fire long. Not as good as back here, but later in the cycle, the positive turn can definitely help. Let's see. These signals. Everything pretty bullish. And then you've got your nested squeeze setup with a 4-hour squeeze inside the daily squeeze. So AMZN looks pretty good. Now, as far as the whole idea of, alright, it gaps up, trying to buy it on the pullback, this is actually a pretty good example. You gap up, pulls back to the 21, pulls back to where it should find support, and you get a perfect hold. So that would have been a pretty nice entry. But yeah, I do like AMZN. And then our old pal Microsoft here. Microsoft looked like it was about to die. But this remains a total squeeze fest. Daily squeeze, 2-day squeeze, 4-hour squeeze, and a 15-minute. So if the nature of the market continues to be bullish, by default, you're kind of already thinking there's a better chance the squeeze here fires long. As far as the template we're looking for to trigger an entry, it isn't perfect. Everything's a little neutral. You got a 5-minute sell signal. So as far as the signals are concerned, I think right now you definitely grade out Amazon a little bit better than Microsoft. But we continue to keep an eye on Microsoft. Then we've got Netflix. And we do want to be mindful of earnings. So Netflix has earnings on the 19th. That's a week from today. So I think there is such a thing as cutting it a little bit too close. And I tend to think you get within that 4 to 5 trading days away from earnings kind of range. You are cutting it a little bit close. However, putting earnings aside, got a bunch of squeezes here. Daily 4-hour, the 2-hour, 1-hour, and the 5-minute. So if we can get a positive kick here on the histogram, I think you look for that daily squeeze to try to take out 450. So we got some Amazon, Microsoft, Netflix on the watch list. And then one name that I do like is I guess you could call it like a speculative idea, is Roblox over here. Weekly squeeze, 3-day squeeze, 2-day squeeze, daily squeeze, 30-minute and a 15-minute. And you got a bunch of buy signals to go along with your squeezes. Our favorite combo. Now here's the thing with Roblox. I think you stay far away from this thing for a bullish trade if this ends up closing back inside the box. 1, 2, 3, 4, 5 or 6 times this thing gets locked and loaded with buy signals, pushes up into that 43 level, and then just gets knocked right back down. If they can keep price above previous resistance, kind of gives the setup a bit more of a green light to go on ahead and fire the daily squeeze, and then potentially get that nested squeeze kind of move. Daily squeeze triggers the 2-day, that triggers the 3-day, and then you got that big fella here on the weekly chart. So if we check the hourly chart, so here's a good visual. Big push. You end up, 3 or so average true range moves above the 21. That little kickback tends to be a nice spot to build your entry. So this is actually pretty solid. 30-minute squeeze shaping up. We'll definitely keep an eye on Roblox for tomorrow. That's it's not too far from where we want it. I mean, the perfect entry is back here. But as we've talked about a few times, this one's just been tough to try to catch early. So Roblox is pretty solid, and then if we jump over to the scans here, we have Berkshire, Bank of America, Adobe, Salesforce. So we'll check a few of these out. Save scan. So come to find out, I never knew this. You can actually just pull up your scan results from the watch list. So if I go to personal and I go to Big 3 Bull Squeeze, it just populates all the scan results into the watch list. All right, so let's run through a few of these. Y'all know the drill. We're a little bit late on that one. Earnings in a few days for Bank of America. One that I do like is Adobe. Very, very solid. Let's see, hourly chart. Buy the first kickback. Try to buy the first dipperoo. Salesforce, big gap up. McDonald's. I won't lie to you guys, I did have some McDonald's earlier. I got that #1 value meal. I mean, not usually the kind of thing I would drool over. As far as like the name itself. But man, check this puppy out. Earnings is the 27th. Crapload of squeezes. From the 3-day chart down to the 2-hour chart. Not bad, not bad. McDonald's can move. And what I think might help McDonald's move I might be wrong, but I want to say McDonald's makes up a decent chunk of the Dow. Let's see. The diamonds. Yeah, McDonald's makes up 6% of the Dow. So if that daily squeeze over there that we were looking at, if they can pop that to the upside. Yeah. So McDonald's is pretty interesting. What else we got here? Shell. Cisco. Yuck. No bueno. Comcast, Intuit. Caterpillar's been pretty strong. SPGI, AXP, UNP, John Deere. LMT looks pretty good. ADI looks good. ADP, AMT. A lot of these look pretty good, guys. Check this one out. EPD. Buy signals on every time frame. And squeezes on almost every time frame. That one's pretty clean. I'm going to actually put that in our watch list. EPD. Alright, anything else here? USB, PSA, Baidu. Baidu's pretty clean. Today's one of those days where if you bought everything yesterday, you're in awesome shape. If you didn't jump into everything before the CPI report, gotta wait for that first back test. The good news, potentially, a lot of these squeezes haven't fired long. So if the squeeze fired long 5 days ago, and, Baidu's up here at 160, yeah, you've definitely missed the move. Before the squeeze fires, if you can catch one more dip to an hourly 21, you might find your spot. So that is that's the thinking for now, my friends. Daily charts look good, weekly charts look good. You've got a lot of big squeezes in leadership. Ideally, we're trying to play for the next push higher after, some sort of back test of intraday support. I'm going to anchor to the hourly 21. But if we get within the ballpark, close enough for government work,